Hey, welcome to this video on triangle trading patterns. And you know, when people usually look at triangles, they're looking at a big pattern. So something like this, where they're looking at lower highs and then higher lows. And this would be, I would say, a medium-sized one, but still pretty big. And this is the kind of thing they're looking for. This would be a symmetrical triangle. And these are okay. I don't personally like to trade them very much. I normally don't trade them too much this way. I'll show you what I trade with triangles that works out very well for me. What I like to trade are basically what I call mini triangles in a trend, within a trend. So a little different than the big major triangles. Let me show you what I'm talking about. So normally in most trends we see higher high, higher low. Look at the retrace. Then higher high, higher low, higher high, higher low. Okay, that's your typical trend. No triangles in here. What I like to look for are triangles in these little retracement spots. Little retracement there, that's where I want to see a triangle. And here's what we've got. So the first thing is the overall trend is down. We're in a fairly good down move, and that's the first thing that we're looking for. And we're going to trade in the direction of that trend. So this moving average is the 50-period simple moving average, by the way. Now, then we're going to look for, in the retrace, what do we have? Okay, so we've got a little move up, a higher low, higher high, complex retrace, ABC complex retrace, right? So as we come back up, that's a B, C complex retrace. Very common pattern. And sometimes I'll take those short, depends on other things. But what I prefer even better than those are these triangle retraces. So we get a little triangle within the retrace. So here you go. There's your lower high. And here's your higher low. And there's your triangle. So what this is doing for you, the dynamic of this, you've got your higher low and your lower high, just so you can see that there. It's a symmetrical triangle. And again, we're going to trade it in the direction of the trend, so we're going to take it short. But the dynamic of what's happening here and the energy of the market is that, again, the overall dominant direction of the market is down, and we had a pretty darn strong move here. And that strong move, what happens when you get strong moves like this often is that the market participants, after they see something like, that, after the market gets down here, then people are hesitant to take the market short because they feel like, well, they're late to the party now. And in a sense, they are. So, and also now they'd be selling at a low price. You want to sell high and then cover low. And so what happens quite often, and this again is mass psychology as to what causes these patterns on the charts, is that people hesitate. And they say, you know what, I've already missed out on this big move. Or people were in on the move and they're taking their profits. And so they're actually getting out. Maybe they put in a stop above the high of this bar or something. And so the market retraces back up a bit. And you had a lot of volatility coming down. That's also important. A lot of volatility. And the market goes through a cycle of being highly volatile and then going into low volatility. Those of you who are familiar with Bollinger Bands, you understand this concept where the bands will expand and then contract, go into a Bollinger Band squeeze. And that is a constant fluctuation in volatility in the market. That's a cycle, another type of cycle in the market. High volatility, low volatility. So here we had a high volatility time in the market, and then volatility comes out. Well, if you can catch it at the end of that low volatility cycle, then you will usually get a pretty good impulse move out of that pattern. In this case, it's a triangle pattern. And that's why I like trading triangles, is because the market will often explode out of them and make some, pretty decent money in a short period of time. So our risk on this trade is from there to there. We'd be getting in here, we'd be placing our stop loss here. What's our reward, or at least our potential reward that the move gave us, was all the way from there to there. So that's better than 2 to 1, better than 3 to 1. And that's how you have to look at it, not so much the pennies over here. So that is why this happens, is because we go from expansion to contraction. And triangles are contraction patterns. They show you when the market is going to low volatility, and we like to get it at the end of them, so that end of that triangle pattern back in the direction of the trend for another explosive move, or at least explosive in the sense of a decent risk-reward ratio. So if you like this video, please understand it's really free, but on the other hand, if you got value from it, then you have a moral obligation to share it with others. So click on that little share button below and share it with the world. Also, if you're watching this on YouTube, please click the thumbs up icon and leave a comment, because that really encourages me to keep creating more free tutorials for you. And one of the big deals I want to give you today is what I call the rubber band trade. It is a fantastic win-loss ratio trade. It's very simple. I'll teach it to you in about 26 short minutes on a special video, which you can get absolutely free by clicking on the little image in the top left corner, or if you're on a mobile device, click on the little eye with a circle around it in the top right corner of this video. And if you're not watching on YouTube, there's probably a link below or an opt-in form on the side. Once you do that, I'll personally email the video to you with the rubber band trade strategy.